Good afternoon, my fellow traders. My name is Michalis and I'm one of the market analysts here at HF Markets, and I'd like to welcome everybody to a very important webinar. It is a very important webinar for three reasons. Number one, it's an important webinar because we're going to be analyzing the market live while major economic data is released. So we will have the JOLTS job openings. We will explain exactly what that is and why it's important, and also what kind of effect it can have on tradable assets. And in addition to that, we will simultaneously see the release of the CB consumer confidence, both related to the US, but of course it can have an effect and an impact on multiple assets, including the stock market, commodities, and of course the US dollar as well. So this is the first reason why today's webinar is extremely important and what we're going to be looking at. The second reason is that we're about to have very significant earnings data, so quarterly earnings reports from major companies which are mainly associated with the S&P 500 and the Nasdaq. So we'll see exactly how that is providing certain signals. But we'll see earnings data from Alphabet, from AMD, from Microsoft, from McDonald's, Visa, and also Meta as well. So some of the largest companies in the world. And the third thing that we also will be looking at is preparing for the non-farm payroll. Today it is Friday. Sorry, today is Tuesday. The non-farm payroll will be on Friday. So we're going to look at exactly how we can prepare, what indications we've got so far, what indications we're about to have, and also see how we can use that information to prepare and see exactly what kind of signals, indications, and opportunities there may be within the financial trading markets. So, of course, this is what we're going to be looking at. Now, the first thing I want to start off looking at, ladies and gentlemen, is, of course, what is about to be released on Friday. So, on Friday, we will have what is known as the non-farm payroll. Now, the non-farm payroll, also known as NFP Friday, is basically three major economic releases. All three of them are related to the employment sector. Don't forget, the employment sector is one of the three major pillars for a successful economy. We, of course, need to look at the GDP, we need to look at inflation, we need to look at the monetary and fiscal policy, but one of those four is, of course, the employment sector. Very, very important. And it can create a lot of volatility for gold, for the US dollar, and especially the US stock market, but also global stocks to a lesser effect as well. So the three announcements which will be made. So here we can see the economic calendar. Our economic calendar we provided to you for free, like we do with almost all of our trading tools. So you get access to that for free. It's one of the most advanced economic calendars there is out there. So here you will see on Friday, the 1st of November, we'll have three announcements. These red bars are the most important announcements. So we will have the average hourly earnings. We also will have the unemployment rate, which is extremely important. And we will also have the non-farm payroll figures. So what exactly are these releases? Let's start off with the non-farm payroll figures. The non-farm payroll figures, ladies and gentlemen, is basically saying how many more employed individuals is there within the US economy. So it is expected to show plus 123,000, which basically means between September to October, the US economy had 123,000 more employed individuals. Now, of course, the higher the figure, the more positive it is. Why? Because if there's more employed individuals, it means there's more tax revenue, it means there's less individuals, which the state, of course, needs to support, and it also means circulation of the economy in general is a lot more favorable because, of course, these individuals will be earning, which means they'll be spending, lending, borrowing, and so on and so forth. So it's exactly what creates the economy to go round and round and round. So that is actually the most important figure which is going to be released. The second most important is at the moment the unemployment rate. The unemployment rate was the previous month at 4.1%. It is expected to remain at 4.1%. The third is the average hourly earnings. Very simply, it is saying whether earnings are increasing or if they're decreasing, and if there is a variation, how much is it varying by? So, for example, this is year on year. So, it's saying 4%. It means so far this year, salaries have increased by 4%. Because, of course, this is looking at it year on year. So these are three announcements which are going to be made. Now, the question is, which most people want to know, is yes, that is the most important announcement for the week for most assets, not every asset, but most assets. But what is its traditional effect on the market according to economics? And it's very straightforward, especially for the US dollar and also for gold as well. Now, at the moment, because we've had a lot of changes in the monetary policy, because we've had a lot of changes in the monetary policy, we have to take into consideration these three announcements in relation to interest rates. And very simply, the higher these the higher the data is, should we say, the more positive the data is, the more possibility that interest rates will remain higher for longer. So there's not any chance at the moment of there being interest rate hikes, but it just means that there's less chances of an interest rate cut, a higher chance of a pause, and should we say less frequent cuts over the next quarter, or should we say quarter to 2 quarters. So in regards to the US dollar, traditionally, the higher these figures are, the better these figures are. So, for example, if this figure comes in at 4.1% and the non-farm payroll comes in at 200,000, which is significantly higher than 123,000. And then if the unemployment rate declines rather than stay unchanged, so let's say it drops to 4%, then that's something which is significantly better than expected. Because it's better than expected, the Federal Reserve is less prompted, there's less pressure on the Federal Reserve to cut interest rates. Especially if inflation declines over the next couple of weeks, then that's really significantly less pressure on the Federal Reserve to say we need to decrease interest rates as soon as possible. So, because of that, the US dollar is likely to significantly improve. Whereas for gold, because of that inverse correlation and because of the correlation it also has with interest rates, that can be negative for gold. If we see the complete opposite, if we see the average hourly earnings, also the non-farm payroll figure and the unemployment rate be worse than expected, then actually it's positive for gold, which is a safe haven asset, and it's a negative for the US dollar. Because if that's negative, ladies and gentlemen, most likely there is going to be an interest rate cut this month, as it's almost 100% certain that there will be this month. But people will also start to price in another 25 basis point cut for the December meeting as well. Now, in regards to the stock market, there's a very clear silver lining in regards to what is positive for the stock market, because the stock market at the moment is in a crossroad. If, should we say, it's in a crossroad because number one, the stock market wants the highest possible consumer demand. Because if there's a strong economy and there's high consumer demand, it means there's more people buying their goods, which means, when I say goods, their products and services, which again means that these companies are performing better, they pay higher dividends, their stocks increase in value, and the general health of those companies is a lot more positive. Now, at the same time, though, if we get very strong economic data, then actually the Federal Reserve is not going to cut interest rates, or they'll cut interest rates less frequently. That is negative for the stock market. So it's kind of, should we say, it's very difficult to establish what is positive because yes, we want high data because it's better for consumer demand, but we don't want high data because then there's not going to be any interest rate cuts. If there's no interest rate cuts, it's negative for the stock market. So there's a very clear line, should we say, of what can be positive for the stock market. So we definitely want interest rates to decline, minimum by 25 basis points this month and 25 basis points in December. But we don't want the figures to be so negative that is going to indicate that actually the economy isn't as resilient and strong as we previously thought. There's a higher possibility of a harsh landing, and so on and so forth. So we don't want, for example, this figure to drop to 3.5%, this figure to drop to 50,000, and the unemployment rate to increase to 4.5%. We don't want it to be so negative. What would be ideal is, for example, if the figures come in as expected, or if they come in very slightly weaker. So again, just for an example, let's say the average hourly earnings comes in unchanged, uh, unemployment rate comes in unchanged, but the non-farm payroll drops to 110,000, for example. That's just an example. Doesn't necessarily mean it's concrete and is that way. So here we can see we've explained exactly what we are looking for from the non-farm payroll figures. This is the theory. These are economics. These are what analysts are advising. But of course, we have to always take into consideration volatility. Assets are volatile. That creates risks, and also sometimes the market doesn't straight away follow the theory, the economic theories. So we will look at technical analysis to make sure that risk is limited, or if that is the case, we can still take advantage of the price movement, even if it's something different to what economists may be saying. So we're also going to look at that when we look at the MT5. But what can we look at to give us an indication whether this data will be better than expected or worse than expected? The first thing that we can look at, we're going to look at that today, ladies and gentlemen, is the JOLTS job openings. What are the JOLTS job openings? It's very simple. It's just confirming how many job vacancies there is in America. Now, if there's more job vacancies, is basically indicating that the employment sector is expanding and that is resilient. So that's one factor that we can take into consideration if the non-farm payroll, if that data is positive, then actually maybe the non-farm payroll will be better than expected. So that's one thing that we're going to look at just in the next 2 minutes. That can create a lot of volatility. The next thing is the ADP unemployment change. This is, should we say, not the government announced figure, so it's um, less important than the non-farm payroll figure that we're going to see on Friday. Nonetheless, it can create a lot of volatility. Again, if this is higher than expected, then there starts to be a bias that actually the non-farm payroll figure will be higher than expected as well. The last thing is the weekly unemployment claims. This is actually released not monthly, but every single week. So we can see that here. If this is basically saying how many more unemployment claims there is over the past week. If that's lower, it means more people have a job because they're not claiming unemployment benefits. It's very simple. So if that's weaker, ladies and gentlemen, then again, potentially that's going to indicate that the employment data on Friday will be positive. So we have the JOLTS or job openings, we had the ADP non-farm payroll figure, and the weekly unemployment claims. Uh, we need to look at whether all three are negative, which is going to indicate that actually maybe the non-farm payroll figure on Friday will be worse than expected, or if those three are positive, then we're going to look at a completely different scenario. So what I'm actually going to do is I'm actually going to go to today and see what is about to be released from the JOLTS job openings. What I actually will do is I'll start off by looking at the chart. Let's go to the 5 minute time frame and let's go look at, well, here we got a 5 minute time frame, and look at the volatility, ladies and gentlemen. So if we look at this, ladies and gentlemen, if we look at only 10 minutes ago, 10 minutes ago, the price was as low as here because we're looking at a 5 minute chart here. So just in 10 minutes, ladies and gentlemen, only 10 minutes, the NASDAQ actually increased all the way up to this week here. So 0.33% higher just in 10 minutes, just in 10 minutes alone. It's slightly declined since then. We're currently now at 0.23% higher. Again, is a lot of price movement in a very short period of time. So I just wanted to show you how this can create volatility. So for example, look at the volatility here compared to the volatility here. So let's look at the announcements before we start looking at what is going to be released. What exactly is the effect on the market? The JOLTS job openings. Bear with me. So let's go to our filter. Let's click on the US and let's filter. Let's go to today. There we go. Now, the consumer confidence hasn't been released just yet, but the JOLTS job openings here we can see is significantly lower than expected. So it's not slightly lower, but that is actually significantly lower than expected. So there's certain things that we can take into consideration. Number one, the fact that this is lower is almost definitely indicating that the Federal Reserve will want to cut interest rates this month. That's the first thing. Now, the second thing that we need to look at is if this here tomorrow is lower than expected, and this here on Thursday is lower than expected, then there's going to be a higher bias that on Friday, the non-farm payroll figures will be weaker. If they're weaker, ladies and gentlemen, very simply, positive price movement for gold, weak price movement for the US dollar, and depends on how weak it is, will also have an effect on the stock market. So let's actually go to the price movement at the moment, and we can see exactly how this is influencing the market. Now here I've got a 2 hour time frame. We're going to go ahead and add here a 75 bar exponential moving average like so. We're also going to add, ladies and gentlemen, a 100 bar simple moving average. We're going to change the color. We're going to make it maybe dark blue. There we go. Now, if we're looking at these here, I will add one oscillator as well. We'll add the relative strength oscillator. We'll add it on a period of 15. And I've got 25, 75, and 50. Now, if we're looking at here, ladies and gentlemen, there's a couple of things to note. Number one, yes, we are trading above the trend line. We are trading above with the trend line is the 725 bar exponential moving average. We're also trading above the price sentiment line, which is the 100. And if we're looking at the RSI, we're also slightly above the neutral as well. We're currently on the RSI at 52.90. So it's just slightly above. So if we're looking at this technical analysis, ladies and gentlemen, it is just about giving us an indication that there's going to be and that there's a slight bias towards buyers. Why? Again, because we're trading above these two trend lines and we're also trading above the neutral on the RSI. But what I will say is the distance between dropping below these levels and this level here is still relatively close. Now, the job openings, like we said, slightly weaker is definitely positive for the stock market. Now, it came in significantly weaker though. So now we really need to be cautious about whether that's going to improve sentiment towards the stock market. Very simply because there's now a higher possibility of stronger and more frequent interest rate cuts. Like we said, that's positive for the stock market. So is sentiment going to improve, or instead is there going to be a slightly weaker risk appetite because people are going to become more cautious about the economy? That is something we need to definitely look at, ladies and gentlemen. But for example, for gold, it can be something which is actually positive. Here we go. So look at gold, ladies and gentlemen. This is a 2 hour time frame again. Look how gold has been increasing in value over the past 2.5 hours. Over the past 2.5 hours, we can see gold has increased by more than 0.5%. Let's actually go to a weekly time frame. Gold actually has just gone onto an all-time high over the past few minutes, an all-time high over the past few minutes. So this is something we definitely will look at as well. But you can see there's a reason why I said certain things at the beginning about it, if it's weaker, if it's going to be positive for certain assets, if it's stronger, it's going to be positive for other assets. There's a reason why we looked at that. And you can see that is something that has actually taken place. So, ladies and gentlemen, here we can see the price is increasing. It did see a dip. It went to a dip to that trend line, which is also a lot of the time the area where the price will find support and basically increase back upwards. So now we need to get a good understanding of if we're going to get a signal that the price is going to increase. Now, to be honest, this is very clear, strong momentum. We saw a dip. To be honest, that dip probably hit a lot of people's stop losses. If it hits a lot of people's stop losses, then people that are buying are more easily able to buy and take advantage of upward price movement. So if, ladies and gentlemen, that hit a lot of people's stop losses, to be honest, a lot of people would have put their stop loss there because a lot of people, they look at where the price is moving and they place their stop loss just below that. It dipped, knocked a lot of stop losses, and we can see very strong upward price movement. Now, if we're looking at this upward price movement, here's the major resistant level here. Some people may place the resistant level slightly higher, like here or here. Either way, we've broken above that. Now, because we've broken above that, ladies and gentlemen, we have a breakout. If I also look at crossovers, there's two types of crossovers I can look at. I can look at a stochastic oscillator. Now, bear with me. Let's add that again. If I look at a stochastic oscillator, for some reason it's not adding it for me. Very strange. Let's add the crossover using moving averages. So if I add here a moving average, 18 simple moving average, and then I'll add an 8 exponential moving average. I'll change the color. Let's make it orange. There we go. If we look at the latest crossover here, you can see that crossover is definitely an upward facing crossover. So there we have a signal that the price is seeing upward momentum and a buy signal. So we've crossed and formed a breakout. We've also got bullish crossover here as well. So here we can see definitely a signal that potentially the price is going to increase upwards. Now, if the price is going to increase upwards, we can see two major resistant levels. We can see a resistant level here, which is relatively close, but not, should we say, necessarily so close that we cannot take advantage of it. We definitely can take advantage of that. Then we've got another resistant level here, and the next resistant level is actually at this point here. Now, I'm not using the swing high, I'm using the average swing high. So keep that in mind. I'm actually using that to plot in my resistant levels. So even if we're taking the first scenario into consideration, ladies and gentlemen, that's 0.20% higher than the current price. The next scenario is 0.46, and the next scenario after that is 0.74. Now, what people can do, and what a lot of people do as well, is they try and lower the risk by placing their stop losses slightly lower than the resistant level. So instead of looking at uh, the resistant level, they'll look at 70% of that. So instead of aiming for that level, they may aim for this level here, and approximately somewhere here, and then again approximately somewhere here. And what also people can do to slightly lower the risk and mitigate risk, and should we say spread the risk, is instead of opening uh, one large trade here, they'll open three smaller trades. So the first trade, they'll exit at this target, the second trade at this target, and the third trade at this target here. Now, like I said, the price performance of the NASDAQ is definitely now needing further momentum and further support. Even though we've seen strong price movement, the JOLTS job openings is significantly weaker than that which is expected. So we still have a possibility that people will really take a lower risk appetite and say, wait 1 minute, are we about to get a harsh landing? Is something happening within the economy? If so, I want to get out as quickly as possible. There's still a risk of that, but that risk will not exist, should we say, if we get the appropriate earnings data, because we are in the middle of earnings season, ladies and gentlemen. So if we look at an earnings calendar, any earnings calendar, so for example, because we're looking at the NASDAQ, I'll look at the NASDAQ's earnings calendar. So tonight, should we say, after market close, Alphabet will release their earnings, and also AMD will release their earnings as well. Tomorrow, we'll get Microsoft and Meta releasing their earnings. So over the next 2 days, ladies and gentlemen, today and tomorrow, we're going to have almost 20% of the weight of the NASDAQ releasing their earnings. Now, if we look at some of these companies, ladies and gentlemen, look at the look at Alphabet, which is releasing tonight. Over the past 5 days, they're 2% higher. This morning, they're almost 0.5% higher. The reason why, ladies and gentlemen, is very simple, because shareholders are holding on to their shares, more people are buying the stock as well. Tonight, they're releasing their earnings data. Most likely, these individuals are predicting a successful earnings report. Otherwise, why would they be buying? So, this is something for us to take into consideration as an indication. Also, AMD. AMD today alone is 1.63% higher. And the market's just open, by the way, ladies and gentlemen. Over the past 5 days, 6.5% higher over the past 5 days. They're releasing their earnings tonight as well. If we look at Microsoft, Microsoft is up today over the past 5 days, slightly lower, not significantly lower, but slightly lower. If we look at Meta, today is up again. So four companies all up today. Over the past 5 days, it's more or less unchanged. So I wouldn't say that's something to brag about necessarily. But you can see these earnings reports are influencing the market. If today's two earnings is higher than expected, and we pair that with the JOLTS job openings, then that's something we can definitely take into consideration. If tomorrow's earnings data from Microsoft and Meta also is better than expected, then that's something really significant for the NASDAQ. And then the fact that the job openings was significantly weaker actually becomes something positive, because we've got interest rate cuts and significant positive earnings as well. Now, if we look at indices globally, ladies and gentlemen, since the announcement, global indices have actually declined. So you can see here the DAX is lower. We can see here also the Euro Stoxx 50 is lower. We can see the Russell 2000 is lower. The Nikkei 225 is the only thing really that's seen strong gains, that and the NASDAQ. But very important, here at the very bottom, you can see the VIX is 0.79% lower. That is something definitely positive for the NASDAQ. So if that remains low and continues to decline, that's something positive for the stock market. And ideally, though, also what we want to see is that bond yields decline. At the moment, they're up. They've taken a hit since the announcement, we can see here. We need this to drop further. If that drops further, again, that's positive for the stock market. So this is something for us to take into consideration. Let's go back to a 5-minute time frame. Even as I've been speaking, before the price was here at this red line, even as I've been speaking and mentioning the upward price movement, the price has already formed a further 0.12% higher. Scalpers, ultra short-term traders are already hitting their take profit. Now, let's look at other assets as well. I said already the influence on gold, that if it was negative, it would be positive for gold. Gold very clearly is seeing indications of upward price movement. The only thing I would say, ladies and gentlemen, is because we're now onto a higher high. So we can see we're on a higher high. If it continues to increase further, we should be cautious that after increasing further, a lot of the time the price can retrace backwards because people are earning a profit. People want to cash in that profit. And as the price becomes higher, sometimes the psychology of traders change as well. So we do need to be cautious of that. But we're above the 75 bar exponential moving average. We're above the price sentiment line as well. By the way, if we can see, if I can see some questions, if people have questions, of course, they're more than welcome to ask at any point. And if we look at the RSI is at 68. So that's in an area where it's indicating buyers are controlling the market. But what we need to do is also need to establish ourselves where we're going to enter our buys. Where was the announcement for the JOLTS job openings? It was at 4. So here, ladies and gentlemen. So since the announcement was made down here, the price has increased already by 0.22%. Now, the latest crossover happened here. There was a crossover upwards before that here as well. So we've had two recent crossovers over the past few hours. The price is significantly higher. Now, what a lot of people want to do is they want to see on the 2 hour that we're above these two lines. We're above the 50 on the RSI as well, and then only concentrate on the bullish crossovers on the 5 minute time frame. If we see the opposite, if we look at below these lines, so I can give you an example of that. Let's look at, for example, the euro against the GBP. See if we're below. There we go. So we're below these lines here. And then what we want to do is go onto a 5 minute time frame and look at the prices, the crossovers where it's crossing below. So we can see we're crossing below here. We also cross below here. And we also cross below here. So you can see I'm not using conflicting signals. I'm using signals that move hand in hand, pointing in the same direction. So you can see here, 3 crossovers. 8 o'clock this morning, 9:50, 12:50 as well. 3 crossovers. The price since the first crossover at the moment is 0.29% lower, but at some point it was almost 0.5% lower, almost. So you can see exactly what it is I'm doing here. So looking at gold, we've currently got a buy signal. The only thing I would be cautious about, like I said, is retracements. Let's say retraced here, ladies and gentlemen, to this price here, for example, to this bullet point. So let's say it retraces back to here, but we still want to take to consideration and look at the advantage of the outward price movement. We very simply just draw the Fibonacci retracement levels, like so. If it keeps on increasing, we just increase the Fibonacci retracement. And then we basically said, the price, if it declines back to here, I want at least 65% momentum again to re-enter the buy. So if it declines to here and then starts to increase back upwards again, if it crosses above 65, crosses above here, so not onto a new high, so we're not looking at a breakout, but 65% momentum, so just above here, then that's a signal to take into consideration a buy as well. Now, why is gold, generally speaking, increasing in value this year so much, and also last year as well? You have to take into consideration that since the Ukraine-Russia conflict, there's been a lot of Russian-based wealth that has been frozen. It's been frozen by the US, also alliances of the US, and most Western countries that have frozen their assets. Because they have frozen their assets, Russia and all other countries which are scared of their assets being frozen at any point in time, such as Turkey, which a lot of the time has conflict with America, China, which has a lot of conflict with America, North Korea, also Israel sometimes has conflict with America as well, even though they're very strong allies. What are they doing? Very simply, instead of having something which can be frozen, such as bonds, they instead look at gold, which is uncontrolled. And this is why central banks significantly have been increasing exposure to gold. We also need to take into consideration bond interest rates are declining everywhere. That makes gold more attractive as well. And we also need to look at the fact that more retail traders and retail investors are buying physical gold as well, especially again in those regions, especially like, for example, in Turkey and Asia, because real estate is unattractive there, stocks are unattractive there, bonds are also unattractive there. So they're actually turning towards gold. So again, we can see a lot of buy signals here, ladies and gentlemen, but we need to be cautious um, about the fact that there's a lot of upward price movement. So we need to be cautious that it may create an oversold price. So I'm going to draw two Fibonacci levels. I've drawn a Fibonacci level based on this whole swing and a smaller swing here, ladies and gentlemen. So what areas can we look at to say, is this a level where it's going to become oversold? Sorry, overbought. So we've got the 123 on the first Fibonacci, the smaller Fibonacci, and the 123 on the larger Fibonacci. So these levels here. Let's get rid of the Fibonacci's. So these two levels here is an area that, based on Fibonacci, is an area where maybe we may find resistance at that level because the price may be oversold. Sorry, overbought. So that's something we need to take into consideration. Now, what is the best and worst performing currencies of the day? So if we look at currencies, the best performing currency of the day is the British pound. The worst performing currency of the day is the Swiss franc. So there's a lot of volatility, most likely. And it'll be very interesting to look at the Swiss franc, the British pound against the Swiss franc. Let's look at the British pound against the Swiss franc. Let's also go to a 5 minute time frame and look at that as well. There we go. Look at this upward price movement. It's just a straight line, ladies and gentlemen. That's all today. And again, it's just a straight line. Even if we're seeing retracements, for example, here we saw retracement, we can draw a Fibonacci, enter at 65, like we said. We can draw another retracement here, like so. If it crosses to 65, which it hasn't yet, we can look at another buy signal potentially. But that is something very interesting. Always, if you're trading currencies, you need to look at what is the day's best performing currency, what is the day's worst performing currency. The only thing to be cautious about is as we switch sessions, a lot of the time that changes. So, for example, in the morning, a lot of the time, the JPY, Australian dollar, New Zealand dollar is the worst performing. As soon as the European session opens, they slightly retrace higher. So you need to be cautious of that as well. Let's look back at the Nasdaq. Nasdaq still increasing in value, ladies and gentlemen. So we said that there's that bias towards buyers. It's still increasing in value. Let's look also at the S&P 500. The S&P 500 is very interesting as well because it hasn't gone back to that resistant level, but we've had that bullish crossover from the two moving averages. And if we go to our setup here, we're actually below both moving averages. Below both moving averages, and we're at 51, so we're actually at a neutral level. We're between now, that's increased, we're between the two, and we're slightly above on the other side. So that is at a neutral level. So at the moment, that doesn't yet have a buy signal on that setup. It may do so later on, though. It may potentially do so later on. It depends massively as well, to be honest, on the four companies which are going to release their earnings over the next 24 to 48 hours. That's definitely something extremely important. So, ladies and gentlemen, let's end today's session because we've been speaking now for 40 minutes. We have, for traders which are very new to the market or traders which are trying to improve, we also have copy trading. So we have one-on-one sessions with market analysts. We have also a lot of educational material. We have webinars. We have daily market analysis. We have short videos, we have longer videos for analysis as well. There's a lot where we provide to you for free to give you the right information in order for you to be trading with knowledge and confidence. But in addition to this, we also offer copy trading. So you can view how people are trading and use it as an educational tool, or you can copy other traders which have a high success rate and a low and also a high reward to risk ratio, and also a low risk rating, which is ideal. So everybody has access to that as well. Whether you're going to use it for educational purposes or use it to copy other traders as an investment, you also are able to do both, ladies and gentlemen. And you can also do this whether you're copying or trading by yourself. You can do it while trading with no overnight fees. Um, so that is also something you can take into consideration. In the meantime, though, ladies and gentlemen, we've been speaking now for 40 minutes. I don't want to take up too much of everybody's time. We've looked at what influence non-farm payroll figure will have. We've looked at the free economic data that we can look at to help us with NFP. And we've also taken into consideration earnings and looked at signals live on the MT5. So that's it for today. Trade safe, trade responsibly, like I always say. In the meantime, though, goodbye and take care.